Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Thursday, September the 16th, 2010, and it's time to look at the markets. Okay, today we're going to start off looking at the FTSE, the Financial Times Index of London. We told you yesterday, look for this guy to be rolling over. It was at extremes, and today we are starting to see that. She can still fight around here and there, but the main thing is she is overextended by all measurements you would look at. Also, news out of the UK, one of our members brought to our attention. They're talking about banning short selling or curbing it at least. They see what's coming. So keep in mind that that kind of news doesn't come out unless there's a problem on the horizon that they recognize as being a major issue moving forward, okay, which confirms what we're saying is there's a big move to the downside coming, and they're looking for ways to curb that. Quick look here at the Hang Seng Index, the Hong Kong Hang Seng. You'll notice right here we are overextended like we talked about for the past few days, and we told you stick a fork in it. She's done right there, and we did gap down today, sell off, but she didn't stay down all day. She didn't actually bounce back up, but this is still a sell signal. Nothing here is bullish. Again, talking about its bearish divergence, these are telling you that this is not going to sustain. It's not sustainable. It's going to break down. You're going to fall back down below this level to take out this low like you did on the indicator of the slow stotch, okay? That's telling you that's going to get taken out. This low point corresponds to this low point, so this line will be taken out by price activity in time, okay? So be looking for that. Quick look here at the NASDAQ. She was up 1.9 points for the day. I'm sorry, the change there. The main thing about this, the size of the move doesn't matter. The fact that she was up, that kills it. Here's why. You've got 1, 2, 3, 4, 5, 6, 7 consecutive days to the upside. That's the high end of the average. Look anywhere on the 6-month chart, you'll find 7 is a high end. 1, 2, 3, 4, 5, 6, 7, and you roll over. See back here, we had 1, 2, 3, 4, 5, 6, 7. Then you roll over. Okay, doesn't mean she has to roll over. It just means you're at the high end. So buying here would just be kind of silly. You would be buying a overextension. So 8, 9, it doesn't really matter. It can't sustain it. It's going to roll over. We have been in a pattern of at the tops of doing those fool's rallies where the market comes up to the overbought condition on all the averages and then tries to sustain it. We've talked about this before. We talked about this one before it happened as being a potential situation like that. And that's exactly what you have going on here. All the signs are telling you to leave this market alone. Do not be long. But price continues to go higher. Even though small, it's still ticking higher, and that's drawing in people who don't know any better to go out there and buy when in fact they should be short in this market. You've noticed, you've seen this situation before. Here we've got one developing now where the market should have just rolled over but is still fighting it to the upside. You had it back here as well before all of a sudden just news came out and boop, you just left everybody right here holding the bag, all right? Back here, you had a short signal, all the conditions were overbought, and the market just kept fighting to the upside and then flash crash, okay? So this is another situation like that where you're developing the same problems. Ultimately, we've been trading in a relative tight range right here. We're going to talk about this range today and tell you why it's such a problem compared to one of our indicators, okay? Now let's move on. Quick look here at the Russell. This one closed down for the day, 4 points for the day. The Russell 2000 Small Cap Index, you'll notice what it's doing here for the past 3 days. You've had it, or past 4 days. What day is the upside, and day to the downside. Day to the upside, day to the downside. Relatively going nowhere, but this is known as a kicking pattern. Whenever you see that, you've seen this before, up, down, like that, okay? Those form at tops and bottoms, and this is not a bottom, okay? Pretty easy to spot there. Again, note that trading range that we've talked about before. You just sideways activity here. All right, we're going to bring this into play in a moment. This is the S&P 500 we're looking at here. Same conditions we've seen before. Note the up day, the down day, the up day, the down day, the down day, the up day, the down day. Relatively flat, just trading up here. This is known as, like I said, kicking, and it's seen at tops and bottoms. Here you have a top doing it. Here you have a bottom doing it, okay? Again, this is not a bottom. That was, all right? Cool. And I point out all the charts the same condition. You've got this trading range right here. You could draw it from here as well. But you've just been trading like this, all right? Right inside that channel, okay? You could bounce up here, but you still have another channel right there, all right? I would not be a buyer of any of these markets right now. They're clearly overextended. If you look at all the indicators that you have, They're all telling you, do not be long, look for shorts. Quick look here at the Dow Jones Industrial Average, a 6-month chart. Each candlestick is being 1 day. Volume fell off substantially today, but we still close to the upside, still moving up a little bit. We've seen this kind of activity before back in here. There's one of those fool's rallies and just going on like this, right? But again, the main thing I want to point out, that same old channel, okay? Let me show you why this channel is so important to me. Okay, let's expand out, step back a little bit, get a better picture here. You can see this is a 4-year weekly chart of the Dow Jones Industrial Average, each candlestick being 1 week. And you'll notice here, this is your 2007 high and your sell-off because of all that credit problem right there. The big old bounce in April of '09, bounce back up there, retracing a good chunk of it. Note the failure to break out there. And then you started to roll over in April because of the credit crisis developing there in Europe, all right? And so we sold off right there, and now we've just been in this little channel right here, okay? Remember that. Okay, this is a chart of the 1929 stock market crash that started back here, all right? See the big fail right there, losing about 50% of value because of a credit crisis at the time. Back in here, and this time, the stock market was all propped up with credit due to people going out and getting leveraged 10 to 1 in the stock market. At this time in 2008, 2007, it was due to the 10 to 1 leverage in real estate market. But in any event, you got the same result, a major sell-off about 50%. Then you get a major bounce, in this case about 60%. And our current case that we're in right now, the 2009 rally, you saw about 70%, but same thing. And then you rolled over right here because of a credit crisis in Europe at that time in the 1930s. And this time around, in 2010, we rolled over in April because of a credit crisis in the Europe issue. So now we've sold off, and we see right here, okay, a little channel. A channel. Okay, that's where I believe we're at right now. So when you're buying here, hoping to bounce up here to this middle here, this is what potentially could happen to you. All right. So that is why we're saying be very cautious this market, be very bearish. Look at the indicators. They're telling you not to buy for a reason. It's not safe, okay? The truth is out there. It'll set you free. Expect that double dip, all right? You've sold off. You've bounced. You're going to get the double dip. You're going to bounce from that double dip. Where we go from there, I don't know yet. I'll let you know when I see it, okay? Pretty cool. Again, one last look at the long-term Dow Jones Industrial Average chart. You'll notice here you have your sell-off, the '07 high, the '09 low in April, the bounce back up here, roll over in April because of the credit crisis. Down you go. Now you're flatlining in that channel. Okay? Looks pretty eerily accurate to me. Alrighty then. All right, for those of you guys that do not know, early this week I got interviewed on a online radio. It was a pretty cool interview there. You guys can go and watch that if you go to contraryinvestorscafe.com. I'll put the link in this video, and it's also on our website. You can also link to it through our About Us page on perfectstockalert.com website. It's right there. It's 100% free. All we ask in return, please refer a friend. Quick look at our disclaimer. The disclaimer, read it and weep. Awesome. I'd like to thank everybody for their support of this free service, for sharing our videos online, referring their friends, subscribing to our YouTube channel, etc., etc. Thank you very much for all that. Keep working my tail off for you, and just thank you. God bless. I'll see you all tomorrow. Remember, this market's bogus. Don't let it catch you.